Just take a look at the Nifty constituents as well. So you've got a Bharti Infratel, Tata Motors, they're all big drags. And then, of course, you've got earnings reactions, like the one such case in point being Justdial. Ramkumar Krishnamachari, the CFO, joins in right now. Ram, hi, good morning. Your top line growth is tepid, while the paid campaign addition also looks decent. It includes JD Omni customers. What's keeping things in low gear despite rationalized pricing earlier from you?
No, we are talking about a large base. You have to look at it from, these, you will see incremental acceleration in growth happening over the next few quarters. Now, if you see Q1, my core search growth was 2%. That has gone to 7% right now. Overall growth was 6%, has gone to 10%. We recognize 5 crore of Omni revenue during the quarter. Total about 7,000 to 7,500 total Omni customers we recognize revenue, and during the quarter it was about 1,500 customers for Omni. So our belief is that Omni is a product which we believe is in line with what we call the SMAC strategy, the social, mobile, analytics and cloud platform, which we have been building over the past 2 years. We have painstakingly built this product over the past 2 years to ensure that these large number of SMEs have a platform with which they can go to and address and transact with the consumers directly. Now, if you look at JD as a platform, last 20 years we have built the large number ecosystem for the small consumers, the small businesses to reach out to the consumers in both in the voice and the internet era. Now, Omni is a product for the mobile platform and for the future, and we are building this as a platform for the next 15-20 years. And in line with that, we have built a solid platform with which the small businesses can directly go, and Omni is that product. And we believe that we have made the necessary changes to the product which we launched earlier in February to address the large number of service industry customer. We are now confident that we will with this new renewed product, we'll be able to go to the market and be able to sell it to the large number of SMEs. So it is something of a strategy. It's a conscious strategy that we have been building over the past 2 years, and you will see that incremental benefit of this kicking in subsequent quarters as we move into monetization of it.
Your realizations have dipped and are down now 4% on a yearly basis. Is it on account of mix shift to tier 2 and 3 cities and discounts offered to larger customers? And would you say that there could be further decline in realizations as well?
So the realization actually is a mix effect. I would say that the large number of incremental customers are coming from tier 2, tier 3 customer. While we are adding people in the tier 1 cities, you will see that as the growth rate accelerates or picks up in these tier 1 cities, you will see the mix, the realization also going up. But today what we are seeing is that the large number of incremental customer, actually it's also that in the smaller cities, the tier 1 cities also new customers are getting added, but it's just that the proportion of new customers as overall paid customer is increasing, because of which we are seeing that there is a dip in realization. It's nothing but a mix effect, and I would say it's a good thing, because which is what we were lacking is adding new customers. We were monetizing existing customer, even though it is possible that the rate of increase for existing customers may not have been as high as we were witnessing in earlier years, but still we have been able to retain large number of customers, and the persistency ratio is constant. But what we lacked was addition of new customers, and that is accelerating, because of which the average realization is seeing a dip. This is nothing, as we move forward, as the new incremental customers keep going up, you will see marginal dip, but it will stabilize once the tier 1 cities also start contributing to the mix.
Over 30%, 30 Search Plus services are live on the platform. But wasn't its ad campaign supposed to start before the second quarter numbers? What is the latest on the commercial launch of Search Plus, as investors are now getting anxious about further delays?
As you see in this quarter, you would have seen the margin dip. The reason for that is we have shot the commercial. The expense of the shooting of the campaign has gone into this quarter. So the ads have been shot. Now we are in the post-production. It is only a tactical aspect for us right now. It's a tactical question. When do we actually launch it? We are waiting for all the noise to die down from a festival season, literally pun intended here, and we should be ready to launch in November, and it's possible that you may see the ads coming up, if not on television, but surely on the digital and other medias coming up in November itself. So we are ready with the launch of the commercial. So it's only a question of tactical question for us.
Okay, your EBITDA margins are at record lows right now, weighed down by increasing operating expenses. Going by the upcoming ad and promotional blitz for Search Plus, where do you see your margins bottoming out at?
See, we have to do, if you look at it, the product portfolio is ready. And all these needs to be communicated, and we have to do what is right for the business. We will be spending money on advertising in the next several quarters, as I mentioned earlier, and this will see a dip in margin, and it can definitely go to single digit possible, and that is something that we have consciously we have to do it to engage with our users, and we are going to do that. So we are not going to step away from that, and margins are going to be impacted due to this.
Right, and keeping the core business aside, what can you guide on JD Omni as well as Search Plus for FY17 to 18? Because it seems JD Omni performance hasn't been up to your expectations, and you will need to dial back your guidance there.
Yeah, so I will tell you, earlier we indicated signing up 20 to 25,000 Omni customers. Definitely based on the experience so far and the experimentation that we have done, and the changes to the product that we had to bring in based on our experience with the consumers, with the businesses, we believe that 25,000 is a bit of a stretch in this year. It will be lower than that, and however, as I mentioned, that this product is the product for the future. It is a defining moment as far as the company is concerned. It is based on the SMAC strategy that I told you. That is going to be the future, and this is Omni is a product for that future. We believe that now that the product is ready for relaunch into the large number of SME base, especially in the services industry. Not only the product is already ready for product category, but the services category, the Omni was not ready. Now it is ready. With this, we are going to reach out to the large number of SMEs, which we believe that there is an immense value to the SME, given the way the ecosystem is playing out, given the way the large number of consumers are going online and transacting. The SMEs need this platform, and we believe the Omni is the right product for the future, for the medium to long term, and you will see that in the subsequent quarters, you will see aggressive marketing push by us to sell it to these small businesses to sort of adopt this product.
Okay, good chatting with you, Ram. Thanks much for taking the time out and speaking with us today. That's the opinion coming in from the Justdial management. The stock continues to reel under pressure. Post its disappointing set 3.5% lower for Justdial. And going by the management commentary, it seems like there is going to be pressure in the earnings performance for next few quarters to come as well. The Nifty now